Hello and welcome back to Kitco Mining's Digging Deep with me, Paul Harris, in which we take a closer look at some of the most interesting news items in the mining and exploration space. Joining me today is Neil Adshead, consultant analyst at the Commodities Discovery Fund. Neil, welcome back to Kitco.
Thanks, Paul. Great to be here again.
Now, we have a lot to talk about as always. Gold is over $3,000 per ounce, and it seems confidence is riding high in the precious metals sector, and that seems to be coming through into more M&A transactions, particularly in Australia. Last week, Ramelius Resources said it would buy smaller rival Spartan Resources in a 2.4 billion Australian, that's about 1.5 billion US, a deal. This week, Goldfields bid 3.3 billion Australian, about 2.1 billion US, including a 28% premium for Gold Road Resources to consolidate the 350,000 ounce a year Krea gold mine in Australia. Gold Roads, its 50% partner in the mine, rejected the offer as opportunistic. Goldfield bought its 50% of Krea for 350 million Australian in 2016. Neil, it's good to see M&A with a premium, and it's good to see a company with the confidence to say no. Does this bode well for M&A in this particular bull cycle?
I think you have M&A in all parts of the cycle. This one's quite an interesting one. The Gold Road trying to acquire the 50% of Gruyere it doesn't already own. Goldfields and Gold Road have been in this JV now for many years, and when you look at the value of Gold Road, it's never been higher. It's basically a $3 billion Aussie EV at the moment. So it kind of makes you wonder why is Goldfields doing this acquisition now when they own 50% of the mine, they operate the mine, they know the mine better than anyone else. It's kind of strange why they're doing it now. But Goldfields for a few years there went through a few JVs. They had a JV on a gold mine in Ghana. In fact, they've got two JVs in Ghana, one of which they've exited. And they had the JV, obviously, with a Cisco on Windfall in Quebec, which Goldfields took a Cisco out at a pretty high price recently. So maybe there's been a change in the decision making at the top at Goldfields, that they went through a phase of having lots of JVs, and now they seem to be wanting to collapse these JVs, either in terms of becoming a 100% owner, which is, when you think about it, is the safest and easiest M&A you can actually do, is to acquire the portion of an asset you know the best and basically want to own all of it. Or they're deciding to exit these JVs, as they did with Galliano in Ghana. Yeah, so I think there's always M&A. Gold price helps. All of a sudden cash builds. The board realizes you need growth in any company, and we are going to see more and more of these smaller companies get picked off by the big boys for sure.
Interesting, some of the history you mentioned there about Goldfields and its other JVs. Goldfields also has history of bidding for companies and then walking away when things don't fall into place as they would like. It walked away from its bid for Yamana Gold in 2022, for example, when a competing bid came in again. With Gold Road rejecting this, is Goldfields going to be one and done again?
Well, it was quite an interesting deal, the dialogue, if you read the press release, because it said that as well as Gold Road rejecting it, Gold Road then actually bid Goldfields for their 50%. It's like, well, we're not letting you buy ours, so why don't you sell us yours? So I think what it demonstrates is that a lot of these companies today, a lot of gold companies especially, they're building big cash piles, big war chests, and they're struggling. They're looking at their own portfolio and realizing that they don't have any growth. So it's pretty rare. I think you'll find a gold producer like Goldfields today, or somebody like that, really selling core assets. Obviously Newmont just sold all those different mines. So for Goldfields, I suspect with a deal like this, there's a bit of posturing going on as well. I'm sure if Goldfields returned with a 10, 20, 30% higher bid, now that the deal is actually public, and that's probably partly why Goldfields made the announcement of a failed bid. Now you'll probably find maybe some Gold Road shareholders will be angling the board and the management of Gold Road to go back to Goldfields and say, give us an extra 20%, and then we'll, the deal will be done, and we'll take our cash and go do something else. Sorry, go on. No, I was just going to say, so I'm not sure, to answer your question, is a long way of saying I'm not sure what's going to happen. Wouldn't surprise me if Goldfields come back with a higher bid.
I think that's a very interesting sort of turn of events with the company that's the target turning around and bidding for the the potential acquirer. And that illustrates, I think, that there seems to be a lot more action, more excitement perhaps in Australia. It does seem to be a more exciting market for investors and companies at the moment than perhaps the Canadian market.
Yeah, Australia's got like quite a large population of what you'd call mid-tier gold producers. Maybe you wouldn't call them the sort of big majors. You know, a lot of these Aussies are sort of mid-tiers. They tend to be a bit more aggressive. You know, very focused on growth. The Australian market's been pretty warm for quite a few years. They're all generating money. I believe the Aussie gold price is something like $4,200, $4,300 an ounce. You know, they've never seen anything like it. And there's a bit of a shortage of investment opportunities in Australia for these mid-tiers to grow. So any discovery like, you know, De Grey or Spartan or any of these sort of good up-and-coming groups that are not yet in production are getting picked off pretty quickly. So yeah, it's a pretty hot market in Australia for M&A. But a lot of the Aussies, you know, some of them came to Canada several years ago and Alaska as well, looking to buy assets. I'd probably argue none of them worked out. And they've all kind of gone back home, tail between their legs, realizing that maybe where they should be focusing is being a bit more competitive in their home market rather than trying to develop and produce from mines in Canada, which is a lot more difficult to manage that from Perth or Sydney.
So Northern Star and Santa Barbara, I would imagine, are sort of a couple of the companies.
Yeah, Santa Barbara, Heart Gold got bought by Silver Lake. Evolution bought Red Lake. I think there's a couple of others in there too. Newcrest had a bit better luck buying Red Chris. But yeah, there's just too many of those assets just didn't work out, and I think you'll find nearly every single one of them they're either backed away or they've been downgraded in their relative importance in the portfolio of the Australian gold producer.
Now, when I was reading through the Goldfields release about this, it looked like it wanted to make an all-cash deal. And, you know, I looked at its balance sheet and it seems, you know, how would Goldfields finance this deal? It ended 2024 with $1.8 billion US in debt, $860 million in cash. So presumably it would have to raise more money or sell something else in order to finance this transaction as and when and if it can get it to an executable stage. Is this perhaps a sniff of over-exuberance that will come when this bull market really starts running?
You could say that. I think we're probably approaching a market as the market gets warmer, investors want to see more growth over, let's call it financial management. They want to see, growth per share in ounces, because then it flows down to the bottom line in cash flow. So I don't think investors mind too much if a producer takes on more debt. The interest rates you can get for say a mining company buying an asset in Australia or building an asset, it can be under 5%. So the cost of capital in Australia, I find, is relatively cheap compared to say Canada. And I don't think Goldfields, I think they've got 4 gold mines in WA. I don't think they would have any problem whatsoever raising the majority of that purchase price in additional debt to add to their balance sheet.
Okay, fair enough. Let's turn to Mr. T. You can tell that US President Donald Trump dislikes the media because of his hyperactivity and the amount of things that we have to cover every time he opens his mouth. And this week is no different. For the sleepy mining sector, there seems it won't be a dull moment at all under Donald Trump as his executive orders fly. His most recent is entitled Immediate Measures to Increase American Mineral Production. And this aims to boost domestic production of minerals, including uranium, copper, potash, and gold. Under the order, projects with a plan of operations and a pending permit application may be prioritized for immediate approval. Project developers have been falling over themselves this week to praise the action from the White House. Neil, what's your take on this executive order?
Well, we could have a whole show on this, and it's quite a fascinating topic. Now, if you kind of read the fine print, read the announcement a couple of times, it seems like it's really driven here by, I'll call it the Department of Defense, but it seems like it's driven by a US national security initiative. So it's almost like the Americans are saying, and there is the term in their military readiness. It's almost like the Americans are planning for war, so to speak. So we need more homegrown production simply because we don't want to rely on, Johnny Foreigner to supply us with our copper and rare earths and uranium and everything else, which the United States is typically short. Now, it makes great headlines. I can imagine the promoters of Vancouver wetting themselves over, creating new American companies that are going to, take advantage of this great, these great headlines. But in reality, if you're a developer, a mining company with a development projects in the United States, you're probably somewhat frustrated that it has been difficult to push your project forward. Now, we can get into the multiple reasons for that. People always just throw out the word permitting. I think the permitting regime in the US is okay. As in, kind of how it works. There's laws around it. The problem is often when you get permitted, then the various NGOs, there's community opposition, NGO opposition against the development. And the US being rather a litigious society, these projects can get bogged down in the law courts for years and years and years, and that's probably what the most frustrating thing is. Now, the Republican administration coming out, making all these great pronouncements about bringing on greater, homegrown production, that's fantastic. But in 3.5 years, we're probably going to have it. Well, we definitely will have a new president. What that president's going to say about that, about minerals in the United States, who really knows? One concern for me with US politics and maybe politics in other democracies is that, especially in America, it's getting so petty. Each side, it's like, you're either really with us or you're really against the other side. And this is kind of a pet project for Donald Trump. Now, who knows if a Democratic administration comes in next time and absolutely trashes everything that Trump put in place. It's almost like the worst place you might be is in a US mining development project. And it takes so long. I saw a chart this morning. I think Aris Minerals produced it. And they're claiming now if you brought on a copper mine in the last 5 years, the average time from discovery to production is 17 years. So it's just, we've seen these timelines get longer and longer and longer. And just this 3 to 4 year window of support from the federal government in the US, I'm not really sure that's going to make directors of copper companies, for example, or other developers with projects in the US, go giddy and sign $1 billion, $2 billion, $3 billion checks to build mines tomorrow. I'm a little bit wary. It's good headlines. I get it. It's probably better for the juniors. Whether that's so good for the developers in the United States, I'm kind of intrigued to see. I'm sure a lot of them are kind of wondering what this really means, and I suppose maybe we'll see more. Ideally, we see action in the next 6 months. Let's say that projects are getting pushed through faster. Therefore, the US is open again for mine development, which would be great for everybody in the US mining industry.
I suppose some of the risks there, Neil, are the fact that, if President Trump can make things happen with executive orders, as you perhaps alluded to, the next president can perhaps undo them with executive orders. And as you mentioned, also the litigious nature of society means that, perhaps once Trump's served his term, the lawyers are going to have a field day picking through and trying to push back against a lot of things he's done. But on a leaving that aspect aside, even with speedy permitting, how realistic is it that new mines can be built during Trump's tenure? Because mines, take a number of years to build, even if everything's in place.
Yeah, they do. And, as discoveries get deeper, let's say, and, the metallurgy maybe gets a little bit more complicated, grades get lower, you have to move more tons. The US always has a slightly complicated land situation too, with, various forms of federal land and state land and private land. It's kind of a little bit complicated. So, if you were sitting there right now, you had a shovel-ready mid-sized copper mine, for example, it probably would take you a good 2 to 3 years to build. So if you could switch the light on today, and start the diggers today, maybe you'd have your first full year of production, maybe just as Donald Trump is leaving office. You would maybe be a little bit nervous as to what's going to happen next. Yeah, so I don't know. It's I want to be optimistic, but also you got to be realistic, and you've got to think of the people in the boardrooms who are making the big decisions about allocating billions of dollars to build some of these mines, or at least try harder. So it's going to be fascinating to see what happens in the next 6 months, how supportive the government is really going to be. And a related point there is, this whole DOGE, this Department of Government Expense, I think it's called, or Efficiency, sorry. and they're talking about cutting thousands, tens of thousands of federal workers. So I've already heard anecdotes from Nevada, for example, of a major that's funding a junior that's already cut the budget because they think the junior is not going to get permits to drill a hole this year because the local permitting office, the federal permitting office, has had so many cuts that they think they're not going to be able to process the permits fast enough. So it's kind of contradictory that the government's saying, "Oh, we're going to push all these permits through." Meanwhile, they've probably sacked half of the employees working at the permitting agencies.
Well, I suppose you can push permits through very quickly if you don't actually sort of read them and just sign them. But let's perhaps not go down that rabbit hole. Now, the executive order I mentioned also included gold, which I think caught some people by surprise. Neil, why do you think gold is on the list for preferential treatment? Does Trump want to build up stocks or inventories of gold in the US?
I don't know. I mean, there's always the question: does the US really have the 8,000 tons of gold it says it has? But I'm not really a conspiracy theorist. I'm not going to open that. I'll go down that rabbit hole. Sorry. I don't know why that the US would want to do that. The US has a big printing press, and they can print as many US dollars as they like. Why not just print $1 billion or $1 trillion and buy a load of gold with it in the market? It's a super liquid market if the Americans really wanted gold. So, yeah, it doesn't really make any sense. I'm not sure why they said that. I suppose only Donald Trump and his advisors would understand why they added gold there. I don't really understand what the value of that is to America, just apart from generating a whole load of jobs in rural communities, which is quite a lot of the Republican heartland is where a lot of the mines are operated.
I mean, I suppose that could be it, Neil, given that the average gold mine is a smaller size than the average copper mine, so presumably they're a bit quicker and speedier to actually develop and build as and when you start that process. Now, rumours are circulating that Donald Trump may impose a 25% tariff on copper imports in April rather than later this year, which has sent the copper price much higher and is causing a lot of panic. It's causing a disparity in the benchmark prices on the COMEX exchange. It's about 55 cents higher than the price on the LME, the London Metal Exchange. Neil, can US copper developers respond to Trump's desire to have more domestic copper production, or is this just likely to push up copper prices in the US and probably cause a recession?
I mean, I would like to think the US does have a lot of copper. It's one of the important metals where I won't say self-sufficient, but it is a significant producer, and it could produce a lot more. I was comparing notes with a few friends just before we started this call, and I think we listed about 20 copper projects in the US which are at various stages of advancement. And if all those came on, obviously all of them won't come on, but I saw one estimate that it could easily add over 1 million tons a year to the global copper market. To answer your question, I'd go to the latter point. I think it just creates inflation. I mean, really, a tariff, when you think about it, it's just a tax. The tax goes to the government, makes products more expensive for the consumers, for the local industry, for the manufacturers who need that copper, and they just pass that cost on to the customers, basically. So I don't think tariffs are particularly useful from an economic point of view. Globalization is pretty good for making people wealthier. I think when you get less globalization and more tariffs and import restrictions, I think you just generally make people poorer over time.
I would completely agree with you there. Now, Trump's actions have prompted a similar spot from Canadian Prime Minister Mark Carney, who announced a one project, one review policy to eliminate duplicate permitting requirements for infrastructure projects, including mine developments. He also announced the creation of the First Mile Fund, which is a new capital fund to finance the construction of transmission and transportation networks, linking extraction sites to existing infrastructure. Neil, in Trump, is Trump the disruption the mining sector needs for governments elsewhere to address which many often think are onerous permitting timelines?
I think there's positives coming out of it. Yeah, I actually live in Canada. I have a Canadian passport, and Canada's got great natural resource wealth, and it's sort of historically it would have developed a lot of it as global society required, and then they got a little bit lazy. Permitting got a little bit more difficult. maybe other corners of the world, the collapse of the Berlin Wall, and all of a sudden the Soviet Union's flooding the world with commodities, and Canada kind of turned away from, a large degree of homegrown production. But Trump's words, and the sort of threats of making it the 51st state, it's created a little bit of Canadian nationalism. And I'm not necessarily a nationalist, but I think it's good for people to all of a sudden think, hang on, Canada, how can we make ourselves wealthier? How can we develop our own industry and manufacturing, et cetera, et cetera. So, yes, I think that's a positive outcome of this. Again, at the moment, a lot of it's politicians' rhetoric. There's an election coming in Canada. He's going to say lots of positive things. Whether he really means them, time will tell. But yeah, I think it's good. I think it's good for Canada. Canada is a resource extraction economy. It's pretty important in many parts of the nation, away from the cities. So I think it's generally good for the country, and there's a lot of opportunity in Canada. They're a bit infrastructure challenged in many places. So yeah, one of the best things the federal government could do is to improve the infrastructure, access to power, and just general access, and get out of the way when it comes to permitting. Streamline that permitting. I mean, the mining companies don't want an easy ride when it comes to permitting. They're more than happy to meet all sorts of environmental standards. They just want the regulators to apply those standards efficiently and as speedily as possible.
Now that general election is on April the 28th. Let's turn back to gold. Newfound Gold issued a much anticipated maiden resource estimate for its Queensway Gold project in Newfoundland and Labrador in Canada this week. The project hosts an indicated resource of 18 million tonnes, grading 2.4 grams per tonne gold, containing 2 million ounces, spread across 22 named deposits, grouped into 3 zones. With 61,000 meters of drilling, it seems that investors were expecting a lot more ounces at that 2 grams per tonne grade, or similar ounces but at a much higher grade, given some of the splashy drill results the company has put out over the past 5 years. The stock stole down 30 to 35% on the day of the announcement. Neil, were you surprised by the lack of ounces or the lack of grade there?
I wasn't surprised. We were having a discussion with a couple of friends again about how they were going to do the resource estimate. Were they going to do like a big super pit and try and take everything and just have this big smeared low grade cloud, or were they going to try and domain it a little bit, and try and domain the high grade? It's a bit hard to tell exactly how they did the resource estimate because we've not yet seen the technical report. That's going to be fascinating reading for everybody after 650,000 meters of drilling over 5 years. So it's a pretty amazing, and it's been an amazing story to follow because, the amount of drilling, it's very rare to see somebody do, let's call it 500,000 meters of drilling without putting a resource estimate out. They've had some very, very great headline drill holes. I've got a couple of friends who've worked out there back in the day, 20 odd years ago in that Gander area. There is lots of high grade gold, but it's famous for being poor, having very poor continuity, and that's now reflected in the resource estimate. So it's kind of an unusual outcome based on. I mean, I did go and look at how much money they've spent. It's quite remarkable. So up to the end of 2024, and this is in the financial statements, everybody can read this. On the asset there, over 5 years, they spent 270 million Canadian dollars on that asset. Now, we do the maths on that. That's over $1 million Canadian dollars a week for 5 years. A crazy amount of drilling. I mean, the person who owns the drill rigs here has done very well out of this. But yeah, the actual number, the headline number there is pretty disappointing. Hence the tumble in the share price. But you really need to go back and look at the share price history here. In 2021, the market was pretty hot. And this touched $1.8 billion enterprise value. I had a quick look before we came on the call, and it's now below 300 million Canadian. So it's lost $1.5 billion of market value. Now, where it goes from here, we'll see. There's been a big change in the board and a big change in management, and probably, assumably, it looks like a change in direction. They put a mineral resource estimate out, the first one, talking about a PEA. Is there a mine there? Could very well be a decent mid-sized mine there for somebody. It's just all that hype around the drilling and how big this was going to be. It just shows the sort of madness of crowds sometimes, and that people bidding this up to a crazy number, and it's come back down to earth. And at some point, people look at this and go, actually, there's possibly a mine there. It's just nowhere near as big and as sweet as what people thought it was 3 to 4 years ago.
Now, as you mentioned, Neil, a preliminary economic assessment is planned for release in the June quarter. And if the mining doesn't work out, maybe they can put a ski slope on their share price chart. As you mentioned, back in 2021, it was trading around $12 per share. It's now, just over $1.60 Canadian, I believe. Now, with the concern about the concern there, as you mentioned, has always been the continuity of mineralization. And with 22 named deposits, it seems that the answer is that yes, there is a lack of continuity, and that is going to be a big factor there. The resource was drilled on, they measured and indicated on 30-meter centers. The inferred, I think, was on 60-meter centers. They did blocks of 2.5 by 2.5 by 5 meters. So it does seem that this is going to be a really big factor. And all eyes will be on that PEA to see to what extent or not, and at what cost, what are the economics of stringing all these tiny little deposits together in a plan of operations. And I guess the big question, overriding question, Neil, will be, can this project be mined economically? In your experience, Neil, can projects like this elsewhere be mined economically?
They can, yeah. It depends how you approach it. I'm probably going to get some of these numbers slightly wrong, but I recall there's like a subset in the resource of maybe it's 600,000, 700,000, 800,000 ounces at something like 5 or 6 grams in an open pit setting, which would be a beautiful little starter pit. It's probably more like starter pits. There's probably multiple pits there. But on the positive side, trying to think about this optimistically, it's a very large area. There's clearly a lot of high grade gold there. It's in a supportive jurisdiction with probably relatively cheap drilling and relatively cheap labor. So sometimes these projects, you stick a pin in them and that they don't look that great, especially compared to relative to what you thought they were going to look like. But over time, and a good example is Detour. You go back and look at Detour, and Placidone walked away from Detour in the late 80s, and it sat there for a long time and did nothing. And it's lots of sort of little skinny high grade veins. But then just through the force of drilling, hundreds of thousands of meters over many, many years, all of a sudden it's now going to be, well, it's not all of a sudden, but 20, 25 years later, it's going to be a 1 million ounce a year gold producer in the biggest gold mine in Canada. So now I'm not suggesting Newfound Gold is going to turn into that, but with drilling and, gold price going up, cutoff grades going down, you never know. You never know, as in this could be a decent mid-sized gold mine one day. It just looks a bit disappointing to the market today, given what the majority thought it was going to be.
Now, one other possibility there, of course, in Newfoundland, Calibri Mining is building out the Valentine project. They're going to have a plant there, and that's going to start producing later this year. So is there the possibility that, the pits are developed at Queensway, but the ore is shipped to somewhere like Valentine maybe for processing, which would obviously reduce the capex, the capital cost of building operations at Queensway?
Oh, I think it's just too far away. It's too far away, and it makes sense, from an economic point of view, it makes sense just building a little plant at Queensway if it stacked up and made sense. I'm sure the PEA is going to look to be positive, but it may only be like a fairly short life mine producing 100,000 ounces a year. I'm just guessing here at the moment. I don't think there's much benefit, much true synergy between the two from an operational point of view. But obviously, if you're operating a mine in a province and the government and you've got a labour force and all the suppliers, there's obviously a positive benefit for you to developing a second mine in the province. So yeah, who knows? I mean, I'd say, even though Newfound Gold's been a big story in the news for 5 or 6 years, there's still potentially a lot more to do there going forward, because it is quite a big area with a lot of gold in it. It's just when you get down to the mining scale, it's just got poor continuity.
Okay, let's end this week, Neil, with a couple of oddities. And let's start with a bit of a spot quiz for you. The name US Gold is taken, as is Patriot Metals and Liberty Gold. So with Trump naming gold in his executive order, what brilliant idea for a name did Palisades Gold Corp, which incidentally is the group behind Newfound Gold, what did they have? What was their idea of their name change for its Nevada subsidiary, Envy King Goldlands? What did they come up with?
I think they call themselves Made in America Gold.
That's it. That's it, exactly. Yeah, trying to really sort of jump on the zeitgeist there. Okay, and finally, Liberty Copper and Gold intends to amend the terms of 19.7 million warrants that are due to expire in February 2027. They're currently exercisable at 20 cents per share, and under the proposal, any warrant holder who exercises them between now and April 15th will receive a new sweetener warrant exercisable at 30 cents per share, 30 cents in February 2027. President and CEO Ian Harris and investor Frank Juster are going to exercise their warrants. Now, Neil, I suppose all warrants are sweeteners, but have you ever come across this particular structure before, where a company looks to exercise warrants and have a sweetener warrant as the carrot for that?
I have seen them before. Yeah, I don't really fully understand sometimes why they do it, because when you look at these warrants, the warrants ones that got exercised were at 20 cents, and I think the stock is around about 20 cents, or the 52-week low is at 20 cents. So I always feel like saying, well, why not just do a financing? Maybe the idea is because of the 20-cent warrants, they think they might be an overhang because they're close to the current price. So as the share price goes up, they think people might, sell their shares and exercise the warrants to sort of reload. So maybe that's the logic here as to why they're sort of encouraging people to exercise these warrants, and then essentially kicking the can down the road and raising the warrant overhang to 30 cents, I believe, which is the new warrant price. So that's probably the logic. I'm sure Ian would be able to explain it better than I could. And I have seen it before. It's not very common. Feels a bit gimmicky. My preference and one of my bugbears of the Canadian market is this desire to have warrants, and I think I'd prefer to see that disappear, whereas you don't really see warrants in the Australian market, and I think it doesn't create these artificial overhangs which you do see sometimes with a chunky warrant position, which is at basically close to the current share price.
Absolutely. Well, that's all we have time for this week. Neil Adshead, thank you very much for joining me today.
Thank you, Paul. Appreciate it. It's good chat.
And of course, if you like what you see, don't forget to hit that subscribe button. I'm Paul Harris, and this is Kitco Mining.